Hey, what's up, guys? What's going on? Good afternoon, good evening, good morning. We'll get started in a minute. Kind of digging the beats this morning. I'm pretty sure that these are not copyright protected, but I don't know. I think if you do play things that are copyright protected, that it only affects you if you monetize your channel through YouTube, and I don't monetize my channel through YouTube. But the last few times that I've had this channel on, so this rave nonstop techno music radio, I haven't had any warnings for the videos. If I do get warnings, I'm not going to continue to push it. But it's hard to find, I don't know, decent copyright-free music for streams. And obviously, it's just for the intro, because I'm turning it off right now anyway. But give me 1 second. Give me a sound check. Ideally, after that introduction, that was not for nothing, and my mic is working. Some of you complain that if you're on a phone, there's a little bit of a buzz, but I listen to it in headphones. I listen to it on my computer, on my desktop, and I don't find any issues with the sound. Sound is good. Cool. All right, let's get into it. Yeah, maybe I'll turn this down a little bit. Turn this down. All right, cool. What's going on, guys? Yeah, I like these beats. These are good. It's not like the kind of stuff I listen to every day. I mean, I have a really, really eclectic taste in music. I mean, from 6 a.m. in my house until 3 in the afternoon, you might have some kind of Chopin, Four Seasons by Vivaldi, and then country music, and then old school hip hop, and then techno and deadmau5, and I'm all over the place. When I was younger, I had like dedicated playlists. Everyone remembers Winamp. Really organized iPods, and now it's just like all over the place. But who can be bothered with really focusing on music as a grown adult, right? Or really staying on top of keeping that stuff organized. When you're younger, you have those like CD folders in your car, and you got them strapped to your. Yeah, maybe I'm expecting that people can reminisce with me, but yeah, we had binders with CDs in our cars. Most of us, and or at least my age, and had them really organized. Anyway, what's going on, guys? Hope you guys are doing well. Thanks for joining. If you're new to the channel, please hit the subscribe button, hit the like button, all of that. I appreciate that. I've been streaming now consistently again for the last couple weeks, and I'm going to be consistently doing this moving forward. So 3 days a week. You guys know me. If it really picks up, then I back off the streams. But I don't think that it's picking up as of late, and I don't expect it to pick up in the near future. That is in any way unmanageable. But my thing is a lot of times when I see people stream during what are arguably good hours to trade, but again, my approach is mostly intraday. And then where I change it is if I have some kind of underlying spot exposure to the market. If I think that we're in a period of, if we're in some kind of high momentum period or conditions that are going to be trending for a while, then I will sort of trade around bigger positions. But still, most of my trading will be done intraday. So like 90% of my stuff is flat end of day. I don't really carry much overnight risk unless it's spot. And even then, that is only something recently that I've gotten back into. But for those who've been following for a while now, I said back in like summer, and this is not like to toot my own horn, but again, just kind of creating expectations and sort of staying consistent with my own beliefs. I said that we would be bottoming probably around Q4. And, whenever I think the market's bottoming, that's when I'd start taking nibbles, and I was buying spot Bitcoin, buying spot ETH at what I figured were opportune moments. But most of my trading is intraday. I don't like to go to bed on futures positions. Even though I'm never really exposed to the point where I'm ever going to worry about liquidation, there is that path dependency aspect. And, something can happen overnight. Exchange can print somewhere that's ugly, and I don't want to have to go back and forth with them to reconcile that, even if it was an improper, print on the exchange that should arguably be reversed, and I end up getting liquidated. You imagine how this can happen, right? I mean, if you're using anything over 1.5 leverage over a long period of time, chances are in this market, you're going to get licked, right? I mean, people thought they'd be able to get away with using 1x, 1.5x, even 2x, or I should say that in reverse, right? And then what happened? We've had major moves they essentially carried everybody out, right? On all spectrums of the leverage scale. Okay, so we're going to go over a few things. I'm going to keep these streams casual. As a reminder, this stream is partnered with Crypto Watch and Bybit. Got to be completely upfront, right? This is something that I've obviously always done. This is not financial advice. Yes, I am partnered with and sponsored by people or I should say organizations, and sometimes it might be projects. I'm not eliminating that. Crypto Watch is part of Kraken, right? So it is, it's a software, but it's part of an exchange. But just to be upfront, yes, I'm sponsored by them. This stream is brought to you by them. And that's the world we live in, right? People have sponsors for their content. There's nothing weird about that. I've been trading for 17 years now. It's not like I need sponsors, but what the hell? There's projects that I like. There's things that I want to see succeed. And if I have a chance to be part of that, like, isn't that, I don't know, it doesn't sound better than not being part of that. Like, if I was one of the first people that Phil Knight gave the waffle shoe to back in the day, I would have been the one, on my stream talking about this upcoming shoe called the Nike. All right. So yeah, all the formalities aside, not financial advice, yada, yada, yada. I don't know. Let's talk about a couple things. I mean, I got a few screens up. I will say, so one, this is Crypto Watch. I'm not going to go over it like I went over it in the last few streams. It kind of fucked up my flow when I do things like that. I have to make pre-recorded content. You could see that dude jumping up. So this is, we're looking at, Crypto Watch is connected to Kraken, obviously. So I have all Kraken stuff on here. If you trade on Kraken, you should be using this. I am from New York, so it's a financial hub of the universe, but the least favored by, I don't know, regulators, and it sits with that unfavorable bit license situation. But the reason why I have Binance open right now is because there's quite a lot of chicanery or fuckery taking place on the Binance books. You can see there's a guy hopping in and out for, there's 16 million, 28 million. There's like 29, 27. And just before all this was occurring only a few points higher, honestly. It's weird behavior. This is just advertised, right? I don't think this guy wants to get hit. This is just, this looks like spoofing behavior. And the books are kind of doing funny things, as you can tell right now. They're going in and out, and that's what happens, though. You can't really get too much alpha from focusing on the limit order book or, bids or offers that are advertised. That's all they are. They're advertised. What matters is if we are seeing them actually have intent to get transacted into. So that's why having something like, and this is, again, this template that I have is, it's my flow template. Yeah, I just labeled it flow. I use other things as well, right? So we go in between. I mean, I'm still going to use TPO charts. When Crypto Watch has everything, yeah, I'll use Crypto Watch for everything. But I know they have things coming out that they plan on coming out with. I know a couple things that they have in the pipeline that, I'm privy to, but I don't want to get into. But one of the things you could do is you could look at footprint chart. You could look at that bid or offer. You could look at whether or not we're transacting into that level on a footprint chart, whether that level is, it's staying there. It's remaining more than just advertised. It's actually getting filled, getting hit. You could look at that by looking at, so say for example, like 27 million is sitting on the offer, best offer, right? Best bid, best offer, or best bid, best ask. Imagine if it's sitting right there, and then you see that, like, let's say for example, that's $28,050. So $28,050. It's sitting there, and you're wondering, all right, is this guy actually getting filled, or is this someone holding down prices and getting filled at the bid with some kind of iceberg or some kind of hidden order? Now you might be able to see that actually, because you might be able to see, one, is that offer getting tagged into? So you could see on the tape, all right, so 28,050 is trading into. Or maybe what you'll see more often than not is what's happening is that offer in this case is, or now it's back at the bid, but either one, the intention is actually to create transactions into the opposite side of the book. So to fill a bid, right? If they're advertising an offer, they're filling a bid in the spot market, or if they're advertising an offer in the spot market, they're filling a bid in the perp market. But what you would see is not necessarily the same presence on the other side of the book, but there would be some, it would be odd that there would be maybe much smaller presence at the bid or the offer, right? The best bid or the best ask, but there would be a ton of trading into that level that for some reason keeps getting refreshed. So, I mean, you could use this tool. You could see that. You could use a couple other tools. But I have my flow charting. So we're going to look at BTC. As a reminder, so this has the ladders. If you're trading on Kraken, Coinbase, there's a bunch of exchanges connected to this. Let me just see. I mentioned how now you can look at the open interest and the funding. Let's look at books. I mean, if we looked at these books right now, we'd probably see all of that nonsense taking place. This is Kraken spot market, Coinbase spot market, Binance spot market, OKX spot, and then you have Binance perps and OKX perps. All right, so let's talk about a couple things, take questions. This thing on the right is that's the NQ ladder. Yes. So if we switch it up, we have the ES now. I'm going to leave this up. I don't know if I'm going to take any trades during the stream, but it'd be a good thing to keep in the event that something's happening during the stream. As you can see, I mean, most of the volume, I think most of the activity that we saw today is stuck between 41.45, 41.50. So those are pretty important levels. And then we built a ton of volume below us, as you can see, below this 41.33 and all the way up to 41.42 region. So established value higher, but we're back within Friday's range for, I believe, both the NQ and both the ES. Oh, we don't even have to guess, because actually they have, the benefit of this is we actually have ES prices and NQ prices on CryptoWatch. So as a reminder, so for these platforms, the links are below. So the CryptoWatch desktop, the CryptoWatch mobile, that's below in the description. The Bybit link is currently offering a bonus up to $30,000. Obviously, that comes with KYCing, and that comes with a certain volume deposit. That's not free money, right? I think most of my followers are, they have a modicum of intelligence, and, well, I should say, well, more, much more than just a modicum of intelligence. All right, so what I was saying was where we were establishing value with respect to Friday's prices. So yeah, we're back within Friday's range for the ES. That's delayed. We are slightly lower right now. So right now, the information on CryptoWatch is delayed for the ES. You know, normally through the CME, you'd have to pay for that data. And I have the full extent of this platform. So I have Trader, which is the highest tier. And I think that that's still going to be like that. So I don't know if they have plans in the future of integrating live data. And then we have the NQ. The NQ is back inside of Friday's range. So we'll go over these because I think that, like, you know, I don't have to say this over and over again, right? I mean, we trade further out the risk curve. We trade like higher beta tech. There's been periods of, you know, idiosyncratic behavior in crypto. There's been periods of outperformance. But I think on average, as a whole, if you're going to ask, like, hey, what should you, if you're going to extrapolate on one thing continuing to the future, what would it be? Would it be that we're going to decouple, or would it be that, you know, we're going to remain something that, you know, trades sort of like tech? I would say that you should bet on correlation continuing and increasing, because one of the reasons why correlations in crypto, why there's a disconnect between crypto and legacy is because, honestly, as simple as it is, they're just not offered on the one. They're much smaller. They're markets that are not as connected to global markets, but they're also just not offered on the same legacy brokerage platforms. So that's one of the reasons why correlations get enforced. You know, just imagine, okay, so if you have something that's trading with an inverse correlation to something else, one of the things that influences that is the human behavior element, right? So I see asset, you know, A goes up. I know that asset B is inversely correlated. If asset A goes down, what do I want to hedge with? Maybe I want to buy some of asset B. And in every other market, right, depending on the data you have access to, the tiers that you know, if you're on one brokerage or another, you might be able to trade futures. You might not be able to. So obviously it might vary from brokerage to brokerage. But you could jump in and out of those things. Whereas crypto is very much like it's across the river, right? It's on the other side in many ways. Now, as it becomes more and more integrated with the, you know, traditional markets and not just meaning like things trading as tokens or on the blockchain and settlement done that way, but I mean like literally you're on TD Ameritrade and you could buy crypto, right, from your TD Ameritrade account. As that happens, which I think arguably that is going to happen, that's just going to enforce correlations even more. Or rather, the relationships that result from that will be the ones that I think that you could rely on the most. So meaning the snapshot that you get from that moving forward, right? The extent of the correlation, the actual behavior. I think that would be the most reliable one to lean on. Whereas like people still kind of hang on how it behaved in the past before, you know, a ton of things occurred in this market that bring us to where we currently are. So anyway, long-winded way of explaining that. But yes, I have the ES to the right. You could look at the delayed data here. Just go through everything, make sure. All right, we'll stay on this chart. All right, so a couple things that I think are we could digest or chew on. So first things first. So I'll go over price levels in a minute. And for that, I'm going to pull up a TPO chart. CryptoWatch doesn't have a TPO chart yet. This is a very specific tool. So CryptoWatch is something that you should absolutely have because it covers almost everything and more that TradingView doesn't. And I think that honestly, TradingView, and I used to use TradingView, is people get comfortable with things, right? It's like a warm blanket. You've used it. It's reliable. But I mean, why would you, even the web-based platform for CryptoWatch, it blows TradingView out of the water, right? One of the things that stop people obviously from changing even to superior things is, and it's going to sound really shilly, but it's a resistance to change, right? I got to learn how to do all this shit again. I got to save all these templates again. Like I'm really comfortable, I'm talking about some, you might be really comfortable with using TradingView, right? But everything gets to that point, right? You get comfortable with everything. There's a little bit of a learning curve, but it's not brain surgery, right? So I'll go over some things, and then we'll look at where we are within a much larger range, but then we have a small little composite that we just broke down from small opportunities that are local. We'll talk about obviously bigger picture. I've been it's like beating a dead horse at this point. My wife usually cringes when I say something like that. But oil had the biggest weekend move, right? So we had OPEC cuts announced this weekend. Very nice feel bad for anybody who was short oil into the weekend. This is why it's dangerous to trade markets that have overnight gaps, right? Or that can allow for overnight gaps. You have that jump risk. So, I forgot what oil was trading at on Friday, but it ended up jumping on the open yesterday up, I think, 5.5%. So this was due to cuts that were announced over the weekend. Cuts obviously when it comes to commodities, it's supply and demand dynamics. So if you have less supply, then what does the market assume is going to happen? Well, prices are going to go up, or, if you have 21 million Bitcoin versus 42 million, it's a different float, and you're going to expect different price behavior and possibly appreciation over time if you have the same amount of demand. So oil, OPEC announcing cuts, this just assumes the same amount of demand, and you have algos responding on the open. You had a 5.5% jump, and that's the biggest move since. That's the biggest Bybit pair on EXO. So anyway, I'll get to that in a second. That's the biggest move. This is it shouldn't be on Bybit. I see what you're saying. This should be on web-based. Oh, because I'm looking at TPO. That's the problem. I look at the chat and I lose my train of thought. This is the biggest move since March 2020, so since COVID. Now, this says a lot, right? This is kind of them assuming that, not kind of, this is on expectation of less demand. Now, I'm not going to get too much into this because it's not my area of competence. I used to trade oil, used to trade crude oil, but I honestly didn't focus a whole lot on the macro, right? Most of my trading, again, was intraday, similar to trading index futures as well. So this says a lot about what they expect when it comes to overall consumption and overall demand. And especially so because you got to think about this is going into the summer, which is a period where people will travel or where they will vacation. So yeah, this is definitely them, or this is the market saying that they expect, or very much that a recession is expected and anticipated. So this is first treated like something that would cause the price of oil to go up, but the expectation is there'll actually be less demand. So there's a lot of people that think that oil is ultimately going to travel lower over time anyway. Now, oil going up is not what you want if you're a Bitcoin bull, right? It's not what you want if you're long the S&P 500. Now, obviously, many things can happen that don't make sense, but the point is that first order thinking, and even second order, because it doesn't, you have to jump through too many hoops, is that commodity prices, especially in this case energy, oil going up, would lead to an increase in inflation. Okay, and then that would be something that would cause the Fed to not pivot as many people anticipate. But as a reminder, they can always adjust, right? They can always adjust. They could always increase production. All these things can change pretty quickly. So PMI came in bad today. PMI has been bad since November, getting worse. So this is, again, more sort of warning signs for a recession is on the way, at least very near. So you had the market jump this morning. So we had the S&P. So we'll go back to that. We had the S&P jump this morning. We had the NASDAQ jump this morning. So right around the open. So this is the overnight session right here, and this is right around the open. This is right when PMI was released. So why is this? Because why is the market moving up whenever this is something that is obviously negative? Well, if the economy is going to go in the shitter, and we're coming off the back of banks also going down the same shitter, well, then the argument is that the Fed will have to pull back or reverse course in some way, whether or not that means pausing or just outright pivoting. So there's a lot of contention between the two camps, but the market responded obviously by jumping at first, but now is trading lower than where that point came in either way, where that print came in. So for me, as I've said, not going to switch it up because it hasn't changed. With the S&P, it's between 4150 and 42. I think that's the zone that you need to see things really start boogieing. As you can see, that is where we came up to and have had trouble so far. And why am I still dwelling on this? Well, it's because that is a 9-month-long range. We haven't been able to close outside of that meaningfully, but for once, where we very quickly resumed course back to the center of that range. We're just back to within that range. But that 42 level that's outside of that. If we close outside of that, 41 or 41.35, I think, might be the actual monthly close level. But either way, this is where fireworks could occur. So if we're able to break through that, it's quite a significant sign. At that point, we've retested the 200, we're out of this diagonal, and then we're out of that multi-month long bear market range. This move right now it's not done in a whole lot of breadth. I think what can happen is you can even get a further move up, possibly to 42, and it's never just printing above that should get you excited. It's actually accepting above it. And if it's the beginning of a trend change, you shouldn't worry about being like first in line, because if this is a larger trend change, it's going to have legs. It takes a while for the market to digest things like this, and you have a lot of price insensitive flows that come in and passive buyers that'll come in and provide tailwinds that should give you more confidence to not necessarily be as hasty in the beginning about getting involved. So if we're breaking above 42, I think you got to kind of tame expectations for possibly coming back and chopping, because again, this is done on pretty crappy breadth. I think you want to see the market continue to develop sort of consolidations higher up as we sort of melt up. So, build value right here, for example. So that is, go back a little bit. We built value back here, range, consolidated, broke out. We've had another strong imbalance move. And I think you just want to see this kind of continue, right? You want to see the market pull back, continue to build this value, build this volume, and then consistently break out, trade higher, and develop higher, right? You don't want to see, it's like building any structure. You want to have some kind of firm base to leave off of, rather than just putting in a one-sided move into the level. I am still long puts going into May tenors for the S&P. So I don't anticipate that we're going to just break through this level and continue to rip. Obviously that can happen, but it's not something I anticipate. The NQ is in bull market territory. So the NQ is by all means. So the 200-day moving average, the 50-day moving average, we throw all these on. If we kind of throw anything on, so if we're looking at that monthly range as well that we would look at for the S&P, we're outside of that, looking really good. But the NQ is always going to overextend compared to the S&P. It is the higher beta. It is the tech dense index, and for that reason, I think you want to wait for something in the S&P to actually print versus just looking at this. Big picture with BTC, and then we'll get down to the low time frame stuff. So big picture, I think this is the most important level on the chart. Again, going back to the question I asked a week ago, what's more important, this weekly break right now or this, multi-month level that is arguably one of the most significant contextual levels on the chart. It's big round number, 30K. The low between these two highs, right? So bull market highs. Some people say this was the bull market all-time high. Some people say this one. I just go by all-time high. So this is all-time high. So multi-week level, multi-month level. If you go back from, January to March 2021, the summer, come back down, retest that. I think that this level is one that we should take seriously. I don't think you want to be overly bullish into this level. I think that 30K is the level to lean on, honestly. Zooming out a little bit. Just the low of this consolidation. You can see we're running into an area where you would expect some resistance, right? This should be a sticky point. There's a lot of people that think that this is just going to continue to rip through this level. Now, mind you, this entire move has been one that has been spot led, but you could say that CZ has done a good amount of buying. There's been plenty of prints with negative funding here. So that is something that you want to see if you're bullish, right? The rally is continually faded. Spot is still trading consistently at a premium to perp. So if we look at just prices across the board, if we look at Binance, Coinbase trading higher than everybody, including Bitfinex, trading higher than Bybit, trading much higher than Binance perps. So these are good things, right? You see the spot market's trading at a premium. But that doesn't have to mean that we're going to continue to rip up. It doesn't mean that spot buyers can't sell. It doesn't mean that there are some poorly positioned buyers up here, right? That won't give up their positioning if we end up pulling back a little bit. And I think a little bit is probably, honestly, if you take out this 27,500 level, I think that we're going to be revisiting these lows around 26.7, 26.5. There's a good amount of similarity between local structures, right? How we moved up here, how we rolled, how we're moving up currently. It's kind of weird that CZ is cryptically tweeting 4 because we know 4 precedes FUD, and he's kind of like preparing the market. Some people are saying that that's for a lawsuit or something that is not maybe as major as possibly the DOJ coming out and announcing something, which is, sort of the other shoe to drop that I think a lot of people are talking about, being inevitable. So the DOJ actually coming after them, right? Not just the CFTC. So again, I think that, listen, if the market is, so a trending market is one that rewards people that buy higher, right? In a strong trending market, you could buy breakouts. So for me, it's like, all right, we're at the most significant level on the chart. My spot buys are up from 20,500. And for ETH, we're going, at this point, I forgot where I got in at ETH. But my BTC buys are in at 20,000, around 20,005, 20,007. So, and I've hedged on and off, right? But not for nothing. If I'm in position and I'm looking at this and I'm seeing we're beginning to roll and momentum's drying up and CZ's cryptically tweeting 4 and, possibly Legacy's looking at a pullback because, again, my anticipation is we're not just going to rip through, then I'm kind of anticipating the same thing to happen for BTC. And I would kick myself if I didn't hedge up here, if I didn't take some off up here. Because, again, if you zoom out, there's really no other extremely significant level on the chart until we get all the way back down to 24.5, 25, or this 30K region, right? And again, if the trend is true and this is, this is a beginning of a much larger move, it's already been a large move. That's one of the points. And 2, it should allow for 30K plus entries. So if we're above these lows and we're back in this structure, so going back in here and we're back above these lows, I don't think that this just stops out at 31K, right? I think that we have a little bit more distance ahead of us. 32 seems like an obvious target, 31.5. But I think that honestly, the point is, I think that buyers of that break would be rewarded versus like buying into the level. But you do you, right? Everyone has to trade how they are most comfortable trading. All right, so I have so there's a couple other things, like for example, more recently, as of this morning, and if you look at this is just an order flow platform. If you look at spot CVD, we're getting, for example, at these lows in the more recent pullback, right? This morning, you had all types of absorption at the low. You had coin margined, you had stable coin margined, you had spot as well into those lows, creating local new lows relative to price, which is relatively flat, and you have open interest going up while funding is flipping from negative to positive to negative quite extremely after all these long liquidations. So it's kind of like prime time long opportunity, right? Squeeze out that positioning. You get a big short squeeze right here. And then what follows up, I think, is more interesting, especially with all the kind of behavior that we've seen recently. We've seen some pretty big spot bids that have vanished, and the rug's been pulled out from underneath us. Again, mind you, this is at a very significant level. But then more importantly, you have these local lower highs in this structure as it's rolling, and the spot market just continuing to buy up and to the right. So if you look at CVDs, there is quite a divergence, right? Perps are selling more, right? Profit taking and a combination of shorts opening. And then you have the spot market that's continuing to buy, but more importantly, as it's continuing to buy up and to the right, the market is actually moving down. So it's a pretty stark representation of absorption. So there's a buyer, there's a seller up here, right? And if there's that kind of seller, I don't want to buy into them, right? They have more money than I do. It doesn't make sense to fade the heavier hand in that sense. I'd rather, sit and wait, like I said, and see, if they're a derivative seller, that's one thing. I mean, if we retake that level, we could see a quite a significant squeeze. But it looks like it's mostly a spot seller. And we're having all that weird behavior taking place in the perp market. Again, I just think it pays to be, we're so close to the level, I think that it pays to just be cautious, right? If we look at, let's see, just locally. So we'll take a look at the TPO chart. You got two ranges. We're back inside of the larger range, but this was so 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. This is over a 2-week long composite. So that's between 28,300 and 27,200 region. So, I mean, we haven't done anything. If you look at like total market cap of things outside of BTC and ETH, alts have done nothing, honestly. Besides small little idiosyncratic flows, there's no rising tide. There's no new capital that came in. There's a lot of volume. But again, not taking us anywhere. And BTC not really doing much either. And again, back within before this move up, so before this little local move up, that's its own composite. Again, this was before that was a 9-day long range, right? So, normally if I see something like this, we had I'll get rid of this box just so it's a little clearer. We had a 4-day long composite. So weekend activity, volume drops off as normal, but overall from left to right, from here to here, volume has dropped off as well. I mean, volume matters where it should matter, right? So you could look at volume for signs of absorption at extremes. You want to see volume come in when price is trading at new levels, right? See new interest in volume and open interest, or see new signs of interest through both of those. But if the markets just continue to move sideways, it doesn't need more volume, right? If you do have increasing volume, though, and you're looking at something maybe to corroborate that in terms of positioning, whether it's really, glaring signs of absorption at the high or at the low, well, then obviously you can make a case for one side getting trapped. But dropping off in volume is normal, right? Or seeing the market drop off in volume as you're consolidating is normal. But we opened up within yesterday's profile. So we opened up within yesterday's profile, rotated out, traded back within value, tapped the high, and then reversed. And now we're back outside of yesterday's value and, more importantly, outside of this multi-day composite value. If this continues and we don't reclaim, I mean, I think you want to see, yesterday's POC was around 28.1. I mean, today you're kind of holding this little composite, this little pocket of, value that we established between 27.8 and 27.5. But I think the longer that we spend outside of and under this 5-day composite, so under 28K, the more likely it is that honestly we revisit lower prices. And I mean, like I said, what stands out to me is the lows of this structure. So around 27.5, we'll see what kind of reaction we get there. And then if we don't have a significant reaction there, there's a good amount of confluence between the low of multi-day value, like I said, going back down to, that was right around here, between the low of multi-day value, you have this brief deviation, but then that naked POC right here. So if we continue to rotate down, this is the area where I would look to see if sellers get caught offside, at least in the near term. And justifiably, I can see why people might have shorted or are shorting even as close as we are to this high, because you do have a little bit of distance to go before we're back down to the lows of the range. And at least locally, it's not a terrible risk reward trade. And there's some other factors as well that make this a little bit stronger than it just being done in isolation. What else? So the green line and the red line are just to be clear, are the yesterday's highs and lows. Right, so we're still within yesterday's range. We're just chopping around. It's not like anything definitively is happening. Right, there's nothing major happening. We're still within, like I said, what was that, 14 or 15 day range. But again, more importantly, where is all this happening? I think the more important aspect is that it's happening all at one of the most significant levels on the chart. And even if we do pull back, it doesn't mean that the bulls have lost control. Right, the market could come back quite a distance and this still resume upward. This still maintain bullish market structure. I mean, if we look at the change that occurred on the high time frame, you'd have to change a lot of this now, right? You'd have to break back with inside this range. You really have to start losing 24K decisively. Locally, I mean, there's levels that you wouldn't want to lose, right? The more bullish something is, okay, if something is really bullish, it shouldn't really give you opportunities to get in. Right? If something is really in demand, it shouldn't really lower prices to meet demand again. Buyers should continue to chase things up, right? It should continue to rise up. You should really just have, honestly, if you have a really strong bullish trend, you shouldn't have, you shouldn't really have pullbacks. You should just kind of have consolidations. So it would be completely normal for this to be the first pullback that we have if this is a really strong trend, right? In a bull market, this is, you'll have blow-offs, right? You'll have blow-offs actually with much larger pullbacks, but what it will be is cases where you have a big move up, a markup from a consolidation. This brings in a ton of derivative activity that overheats, and then your big pullback is back down to the consolidation. Maybe you wipe those lows, but it's not like the case that in really strong trends, you have consolidations, big rolls, and then resumption. It's more the case that you get big pullbacks when you're wiping out all of that crowded derivative positioning to the upside. So the benefit of this structure is that it hasn't been derivative-led, that it has been spot-led and spot-supported, and that we've actually had derivatives betting against this quite frequently within the structure. Again, that doesn't have to mean this continues up, though, right? This is clearly has lost momentum up here and has cooled down. But we could pull back to the lows of this range, right? Like I said, the lows of value. So that's this box right here, 27.3. That POC is right around that area as well. This gap move up, we haven't cleaned that up. We haven't returned back to that level. So we could do something like this. Clean that up quickly, re-accept within this range. My point is anywhere from here up to that level is fair game for some kind of play and continuation upward. I don't think that you should really get bearish unless there's any kind of major moves in the S&P. I don't expect that. I expect, some kind of chop, pullback, consolidation, or unless we lose a major level by BTC. Now, this is a good move. A lot of people talking about this going to all-time high from here. without any pullbacks. I think that that's foolish, honestly. I think that we're beginning to see the signs of a really healthy market. So a ton of spot demand, and spot demand after a ton of liquidations, right? So the people that are getting involved right now, it's implying that they still had their money at the low to buy all that BTC, right? So that's one thing. They're in a better position, a position of strength. The spot positioning doesn't have path dependency, right? So they're probably not price sensitive. But it doesn't mean that you don't revisit these lows and come back within this range a couple times before we resume up. The halving is the strongest narrative BTC and crypto has. It's the strongest narrative in this market. And even then, we're not up to the point yet where we would be really breaking out of that range to new all-time highs. So there still could be, again, a little bit of trouble ahead and much more choppy range-like behavior until the end of the year. I wouldn't really commit to anything happening, honestly. I would just be responsive, reactive, and big picture, I think you could be more confident now. I think big picture, you could be more confident. I talk about a lot of different time frames when I'm on Twitter, and I probably don't label them enough. I should have color codes for my posts and what they're alluding to. But when I said that about being high time frame bearish on crypto, I want to clarify that. I think you can be, in the short term, bearish on the level, right? Big picture, I think in the next 2 years, that's what I'm talking about. I think that the people that are buying here are different types of buyers than we had all the way down here. I think that it's safe to say that our bottom is being put in and is in at this point. All right. Where's the S&P after all of this? So NQ showing more weakness than the ES. Swings up more, swings down more. We ended up taking so quick trades this morning. I was actually in a brief long this morning when we took this low. Overnight low, first strong move back down to the low on data. We had a big move up, so you had a reversal of that. And then we swiped that overnight low. A lot of times there's activity at cleaning up those areas, so overnight highs and lows, so from the weekend activity from Sunday's session. Brief session, right? But I don't know. I don't see anything in the near term. I don't have my Sierra open. This is the DOM from Sierra. Go ahead and reset this at these lows to see what kind of activity we're having into this level. This is, excuse me, that's the ES. Feel free to ask questions, guys. So that's Binance Spot. Take a look at some other charts in a second, too. I mean, not for nothing. This right now is at yesterday's lows. Or no, is that? Yeah, that is yesterday's lows, right? Yeah, this is at yesterday's lows. We're still in yesterday's range. I could see this popping up again. I mean, we're at the midpoint of a larger value area. But if we're able to break back within, was yesterday's value around 28.76. It's right here. So I could see why some people might long this, honestly. Have this little consolidation, break down towards yesterday's lows, look like it's going to pop through yesterday's range, and then or continue down through. And then this is your value area low from yesterday that we broke through and traded back through and clean that up. And again, though, we're still, if we look at not just yesterday, but the last few days, that level. So yesterday's level is also that composite level. So what we'll do is we'll actually just put a new box there. I don't need, we'll go to different chart. So blow this up. Get rid of this box. Get rid of that. And that value area is 28.7, 28, 28.82, right around there. 28.7, right around here, and then right. That's going back much further. It's only from here, so. Yesterday's lows. So if we're able to trade back within yesterday's value, I could see something like this where we pop back up, because we didn't, you have those highs up there that are kind of just a roll. Just going to look through the chat right now. Can you connect through Rhythmic? Hold on a sec. I think I missed something that I addressed while I was starting earlier, and then. I've used Bookmap before. No, Bybit is still a sponsor. I mentioned that earlier. Go back to the beginning of the stream. I've used Bookmap before. Yeah, it's a good platform. Yeah, D. Kent, as he said. I hate redundancy. And some of you guys probably don't understand that. You think, he's being a dick. Well, I mean, I get the same 100. No, I should say I get the same 5 questions hundreds of times a week. So I make the stuff available on the Discord. That was like one of the purposes of creating that Discord. Is to have it as like an archive of all the things that I use, have said, think are important, and be in there from time to time. So if I make it available, you have to do the homework to find it. And that means using your search bar. That means using Twitter search. But yeah, I mean, you can't imagine how many redundant questions I get. No, I don't think you connect with Rhythmic. So volume profiles on Crypto Watch. Apparently they are coming, which is awesome. So there was a question. Someone said, why do you still use the Bybit pair? I will look at flow on a footprint. I'll look at Bybit and I'll look at Binance, right? There's periods where I stepped away from looking at Bybit at all. And then we had major changes in the market with exchanges, where volume went, where open interest went, where certain players went. And then I'll switch it up, right? This is always going to change. I'm going to be focused on where most of the open interest and trading is taking place. So Binance will always be, I don't trade on Binance, right? So everyone knows that. I don't trade on Binance, but Binance will always be something I prioritize because they are where most of the risk is put on in the market. So a lot of times you'll see me with a footprint or CVD focusing on Bybit or Binance. The Bybit TPO is just because you're not going to have any changes really between TPO charts from one to the next. Unless you have, if you're looking at a TPO chart of, so what my point is it doesn't matter. It's been Bybit. I haven't changed it. If you're looking at a TPO chart or a volume profile between one, if you're looking at a volume profile between one exchange or the other, you could have vastly different, get vastly different feedback. Or I don't even know if that was said correctly. But because you're going to have one exchange having, maybe a lot more volume than the other, a lot, one level might have been traded much more on a different exchange. It's going to paint a different profile. The TPO charts, that's what I meant to say in the beginning, are going to be the same for the most part. Unless you have a market that is grossly disconnected, like a really thin exchange, yeah, it doesn't really matter. Oh, okay. So I have to download the new. I thought that is. Isn't this a new one? Oh, I don't know. Anyway, it doesn't matter. I think that CVD is a good tool to spot, obviously, accumulation, whether it's seeing absorption or some kind of TWAP or consistent buying, and also spot exhaustion, where you just see that, for example, cases where prices may be making marginally higher highs, but CVD is no longer supportive of that. And most of the buying is being done on perps, and perp CVDs might be following, but spot CVDs might be diverging. So there's a lot of different ways and a lot of nuance, a lot of different ways you could use it and a lot of nuance when it comes to order flow tools. Let's see. Let's take a look at ETH, actually, because I haven't looked at that. SXP, huh? Let's take a look at SXP. Let's go to this little hot pair board. So what do we got? We'll put SXP on Binance. Put Binance perps below it. I have ARB up, ARB on Kraken, ARB on Coinbase. But here's SXP. Are we looking at it right here? Where's the... Okay, there we go. Perps and spot. Yeah, look at that. Spot trading 6 cents higher. I haven't been following SXP, so I don't know if there's... Oh, this is... Oh, yeah, the BitBit shared this. It went up like 200% a week since he shared it. I can't keep track of all these alts. How did this evolve over high time frames, though? That's what I'm interested in. Oh, it just mooned. Let's see. Were there any signs you should have been long? Probably, right? Okay. Weekly lows. So multi-month long range lows. Breakdown. Another key weekly pivot. Where's my... There we go. Let's go to that daily. So you have a little bit of an under-over that took place, right? So the weekly lows, weekly pivot right here, daily range, market reaccepted above there the first time, traded from point A to point B. But on the high time frame, you got that retest. And then it just ripped through. So it's not, that's a daily move through. Let's see what it looked like on the daily at that level. Let's put a little box there. See what kind of entry triggers you had. Oh, nice. So there's your breakout, right? You had on this, you had a flag on the 1 hour chart. Breakout above all those key weekly levels, retaking daily and weekly market structure, so higher time frame market structure. And then, so this is spot. Your lows on spot are trading at 36.6. And meanwhile, if we look at perps, it would have been, best case, perps actually trading lower. That's that level, right? One sec. Yeah. Those lows. Hold on. There we go. What is the print on that? What is the far decimal point? So 36, spot was just slightly higher. All right, so 36 for derivatives, 30.60. And then spot, just looking at that breakout, right? To give a little bit of context, after the breakout, spot trading higher. A lot of things were spot led though, right? You had short squeezes, derivative short squeezes, and then spot led. Oh, of course, that's Upbit. I was going to say, was it on Upbit? What's BTC doing? Oh, let's take a look at ETH, actually. So one, I mean, we'll leave this ETH BTC. High time frame, in a high time frame range against BTC, right? Just against the BTC pair. We had that breakdown earlier last week, right? Or this is going on almost 2 weeks now. I don't know. I think from the looks of it over the last few days, it looks like there's actually been a good amount of buying of ETH. So maybe we see that the ETH bottoms out here against BTC in the short term. If we look at it on the USD chart, I mean, ETH hasn't even had a breakout of this range yet. Shanghai coming up. So there's a lot of people that are stuck between thinking that, or there's a split between the camps thinking it's a bullish unlock or bearish. What that supply is going to do when it hits the market. Pretty obvious trend line here. I mean, at this point, ETH is in the same position as BTC, right? It's just, it's lower within its own higher time frame market structure. But you have a really clean, I mean, this is really easy to spot, at least, area where value has been establishing for ETH. Not even using a TPO chart, but you get the point that there's a ton of inside activity here. So it's not perfect inside days by any means, but I mean, we're talking about no meaningful closes outside of this really tight range between, 18, 22, 17. Let's say it's a $100 range, right? So very tight. This kind of compression, I think in the case of ETH, I think if you get a move that expands outside of here, given that it's still within higher time frame market structure. And you probably had a good amount of people selling or having sold or hedged into into Shanghai. So honestly, if ETH continues to press up and we flip something like this local high, ETH is above 1850. I mean, I think you got a clear shot to 2K. Right? I mean, it's just kind of grinding its way up, mostly moving sideways, but let's go. I only use the moving averages on like a daily or weekly chart just to get an idea of the longer term trend. But the same can be said with any kind of, firm move outside of this range to the downside. There's not a whole lot that took place in this gap up. So, ETH has to hold 17. Otherwise, there's a lot of activity we could put in down here. Farhan. I find it very interesting that we read so much data to be scalping. I'm mostly going over all this stuff during the stream. If I'm scalping and actually trading lower time frames, I'm probably not looking at much. Intraday trading, though, I mean, I think that using order flow with price action is better than just using price action. But if someone's just been using something and it's working for them, that's why even change, right? But at the same note, like, what is our strategy? What do you mean by our strategy? I don't think me and you have the same strategy. No offense. It's a lot of assumptions in your statement there. Oh, yeah. And one of the assumptions is knowing what SE's ROI is versus, your ROI or someone else's. I will say, SE obviously deserves a ton of respect. I'm not making any assumptions about him not making money at all. But my point is, like, you're just making a lot of assumptions in your comment. If anything, like I said, I mean, if I'm taking like a holistic view during the stream, a big picture view, looking at the CVDs and looking at, all these different things, but I'm going over them with you during the stream, right? Otherwise I wouldn't even talk during the stream because I know all this shit like the back of my hand. I take a look at the market in the morning, get an idea of where we sit, what's taking place. If there's any really egregious flows that have come into the market that might be offside, and that's it. Like I just operate from there based on feel. But I love SE anyway, so. SE is such a nice dude. I don't think a lot of people, he gets hated on because he's not biased, right? He just trades the market. He just takes it as it is. And he likes to rub people. He likes to kind of stick a knife in you if you're on the other side. But he's a really nice guy. I mean, we talk about our daughters. He's a father. We've talked off of Twitter. He's just a genuine guy. It's an interesting question. It's one of the things that I shared this morning because it was, I think 52 Skew shared it. Something like Binance being down to 113 million BUSD now. They're converting that to BTC, and that means they've fired a good amount of their clip. And how will the market respond knowing that flow is behind us now? Will we continue to base off of that and move up? I don't know. It remains to be seen, like everything. It's safe to always say it remains to be seen after everything you say about the market. But I don't know. My whole thing is like, I am bullish, high time frame. I think that, I've been pretty clear as of the last 6 months about what I think is taking place down here, what I think your bias should be for the next few years, right? Not financial advice, what my own is. I've been more than upfront with every time I've added spot to my cold storage. I've made an announcement. I'm buying spot here, putting it away. That is not stuff that I could just sell easily. I have to actually make a trip to sell that if I'm using multi-sig. But you know, listen, we're at the most significant level in the chart. Like, this is the level where if you don't sell and market pulls back, you go, fuck, why did I not sell that? You know, I know that's for me. The same note, like, that happened back here as well. We could go back to 2018, 2019. Like, we did the same thing. Most significant level on the chart. Did it deserve respect? I think it did. You know, big difference back here, though. One of the largest short squeezes ever for BTC. Overall, activity into this level different. Much more punchy. So if we just isolate this level back here and we go back down to that on the lower time frame, I don't know if we could scroll all the way back, but just looking at the daily, it's much more punchy. We have positive drift in this move too. So positive drift, meaning there's an overall positive drift to the market. That's pretty self-explanatory, right? So that was the most significant level on the chart, right? There was plenty of reason that you could have been bearish at that level, or defensive actually, right? It's different to be, it's one thing to be bearish. You know, bearish, I guess you could use them easily interchangeable, but I think it's better to say defensive to what I'm saying right now with respect to where we are. But here we are, major level, right? But we're grinding into it. This is consolidation against and into resistance. There's an overall positive drift to this. This is working its way up. Whereas where we are now, space bar my way to the end of the screen. Get to know your hotkeys with any platform you use, but especially for this. Yeah, I mean, we haven't been at the level as long. Let me clean that up. Look at a different chart. We haven't been at the level as long, but it's a little bit more. There's a little bit more of a two-way fight taking place here. It's not as easy for the bulls. Bulls in 2019 were able to push up with a little bit more firmness and conviction. It wasn't as much of this chop back and forth. Right? Again, going back to that. Too far. So you just see the price action looks drastically different. Oh my God, what happened with Doge? Twitter changed the logo to Doge? Are you serious? You hear the surprise in my voice? No, what's going on? All right, hold on one second. What's going on? Twitter logo replaced with Doge. What? Where is that? Ah, wow. Oh boy, Elon. Damn. Yeah, that's a big move. You know, Doge moves have been reliable to short, but that's pretty big. I mean, if he changes that back, it's gone. It's over. It's done. It'll retrace. Let's see what kind of activity we have across other exchanges as well. I mean, you can imagine a lot of people just FOMOing into this right now. Doge futures on Binance, Doge futures on Binance Spot. Let's make sure we have the prices and the venue listed so I could see them easily. Obviously, yeah, perps are, well, actually Spot's leading right now. It's a little bit more spot activity than there is perps Perp activity. Wow. Elon Musk loves to play games. See if we can bucket this a little tighter. I mean, it's pretty clear that there's you just look at the spread, the difference when you go out. There's a little bit more overhead than there is below. Spot market is much more obvious. You know, this probably gets reversed. I mean, I don't know. You never know with Elon. But the trade is over. Like, this is where news traders just crush it. But see, I don't see it on mine. Is it on the phone maybe? Do I have to reset my Twitter to see it? Let's see. Yeah, I don't see it. I don't know. I don't know where you find that. Oh, that makes sense. Yeah. Okay. My Kashi needs to be reset. Yeah. Okay. Oh, I have to see this though. Oh my God. Oh my God. That's amazing. What a guy. Wow. That's amazing. Yeah, yeah. Wow. Okay. Damn. All right, so where's Doge high time frame though? Just absolutely ripping. I got to get a price box in here to see what the deal is today. So just summary. Oops, nope, not that. Let's connect this with the, see how easy this is to link boxes and create different templates. So up nearly 10%. You could just look at the depth going out 100, 150, let's see, 200 basis points. It begins to flip a little bit more even, but close. This is just a lot more demand. 50 basis points, 75. Now a little bit more offer heavy. I don't know. This probably, you know, this is not something I would short. I mean, wow. That's crazy. That is crazy. Oh. Tagging some highs from February now. I mean, what does this probably do? To be honest, even if it continues to squeeze up, you get something. This is how Doge moves, right? Regardless of the news, we're going to end up pulling back. So it probably does give it, you know, does offer a good short opportunity, but I'd have to start looking at this thing a little bit more finely. But I don't know, guys. I think I'm going to wrap it up. Good stream, hopefully. Covered everything I wanted to cover. Shout out to Crypto Watch. I mean, you could tell this is just a great platform. I know that they have plans to integrate a lot of other features. I mean, as you can see, like I use the platform now full time, but I still need to look at my TPO charts. And you're only going to find these kind of things on specialty platforms regardless. But I mean, they're going to be integrating volume profile, which doesn't make that doesn't make TPO unnecessary, but it definitely is something that a lot of people use instead of just TPO, or they use with TPO, or you could use in replacement for, in substitution for. Wow, look at this. Crazy. All right, guys, have a good one. I will see you on Wednesday. Shout out to Crypto Watch. Shout out to Bybit. Use the links below if you guys are